what's your outlook on demand for oil storage in the next few months in 2009?
Well, certainly 2000 next 3 months of 2008 is going to be probably as exciting as anything in 2009. I think it's a little too early to tell exactly what the supply-demand balance in terminal storage will be in the area. But certainly we're very pleased with our terminal capacity, current terminal capacity at Helios here in Singapore. And the most I can probably say about this is at this point in time, we have a number of people who are interested in talking to us about leasing terminal capacity. So I'm not seeing a dramatic fall off in people interested in terminal capacity in Singapore at this point.
Okay, is the volatility in the oil market hurting or helping your business?
I think a business like ours is a margin business. And it's important for a business like ours to be able to function well in rising markets and falling markets. I think the only thing that affects our business is the speed at which they rise and fall and the correlations that the various physical inventories that we hold and the underlying derivative hedging instruments that we use have. So if we operate successfully, whether the market's moving up or moving down, we should do well.
Chemoil recently signed a joint venture agreement with India's Adani Enterprise Limited.
Yes.
How much will you be investing in? Can you tell us the significance of this expansion into India?
Right. I think that this is one of the most significant things that we've done in a while. Obviously, the two most talked about markets in Asia over the last several years have been India, Singapore, and China. India has been a very difficult market for outside energy companies to penetrate. The Adani Group has done a wonderful job in building a private port project up in the Gujarat province in the port of Mundra. They have invested heavily in infrastructure in that port, both for vessel traffic as well as petroleum product storage and demand. We're pleased to have Chemoil Adani, which is the name of the joint venture. The Adani Group is a 50% partner in that. And we're going to invest, our initial capital investments in that, I think we've announced, is $10 million, which is just working capital investment, which we will ramp up as we staff up the enterprise. We've selected a CEO for the Chemoil Adani venture. They're in India as we speak. We will be utilizing the Adani infrastructure, and we will be bringing to that venture the global trading, marketing, and marine capabilities to that to make that a world-class port. Both Adani and Chemoil are very excited not only about what this means in the port of Mundra, but what it means India, across India. And our joint venture agreement is a pan-Indian joint venture agreement. So it's a first step in a expansion that we anticipate will encompass most of the major ports in India over time.
Chemoil acquired a storage terminal in the Philippines not too long ago. Tell us about this acquisition and what have you planned for this terminal? Right.
The Philippines is a very interesting place for us because it's a nation of many, many islands. Because it has many, many islands, it basically has a lot of marine traffic. As a marine supply company, we did not have a presence in the Philippines. So I think the best characterization of the acquisition of that terminal is it's an entry-level strategy for us into that Asian market. We currently are finalizing all of the final terminal reviews and upgrading projects for that terminal, but we see that as the hub of a strategy around the Philippine Islands. In those markets, we would like to penetrate not only the marine markets, but some of the industrial and power plant fuel markets also. So at this point in time, it's our first step in. We're encouraged by what we see. We anticipate it's going to be generating good positive cash flows and earnings right out of the box, and so we're pretty happy with it.
Do you have any plans to expand into China? Which part of China are you looking at?
Well, I think, as I said earlier, the two markets which everybody here has to recognize are huge markets are India and China. Obviously, the fact that we entered into India I think is an indication of our commitment to continue to explore these markets. China obviously is a market that we have a huge interest in. As we have been for the last several years in the Indian market, we're having conversations with people. Certainly our initial points of interest would be large shipping hubs, ports like Shanghai and the like. I would anticipate that you won't see anything dramatic from us in China for a year or two until we finalize our Indian venture, unless we're able to find the strategic partner, or one of these conversations we're in has the right strategic partners. China is one of those markets we need to be thoughtful, we need to take our time, we need to pick the right partner. And that all takes a little bit of time and thought. And we're going to make sure that we have a track record of when we go into markets, we generally stay. We generally are there for the long term. A lot of people will enter markets and then have to pull back out because they haven't done their homework up front. We're going to be very thoughtful, very careful. We're going to pick the right strategic partners, and then we will move into China.
What are some of the problems you face when it comes to China?
Well, I think the biggest problem, obviously, is the partnership and the equity ownership of assets in China. If you look at Chemoil, Chemoil is a physical supply company. We have a three-pronged strategy. One is expanding around our global footprint, which means going into new ports like the Philippines, like India, like China. And so going into China would be very consistent with one of our core fundamental strategies. The other things we look at is we look at backward integration of our supply chain infrastructure, which are things like terminals, barges, control of that supply chain. And then the third thing is offering our customer base new and a wide range of product offerings. What we find in looking at China, I think it's consistent with two of our three strategies, but the backward integration of the supply chain can be problematic in China. In other words, ownership of terminals in China, ownership of delivery barges in China really require you having a local partner with local expertise, and that's the piece that I think is going to be the most daunting and most difficult to find the right partners with the right assets that have the right chemistry and the shared vision that we have about how we want to run that business.
Okay, moving on to the Middle East, Chemoil has announced that it will be expanding the terminal in Fujairah.
Right.
Briefly tell us about this terminal and the expansion plans you have mapped out.
Right. Well, as you know, our partner in Fujairah is GPS. And GPS Chemoil is actually in the third phase of its terminal projects in Fujairah. When we finish phase 2 here, as we speak, we're finishing phase 2, we have just under 100,000 cubic meters of tankage. When we finish the next phases of the project, that will grow to between 550 and 600,000 cubic meters of tank space in the inner harbor. Those projects are on track. We are finalizing the final engineering and preparing to begin the steel order and construction of that. We believe that third phase of the project will be completed by end of 2010. So early part of 2010 to end of 2010, you'll see the completed project.
What about phase 4 expansion?
Well, the phase 4 expansion is the expansion we were just talking about. It's taking it from the 100,000 up to the 600,000. The last 100,000 of that, obviously, in this terminal, it's a multi-product terminal. So we're looking at clean products, gasoline, diesels, as well as residual fuel products. And so the final phase 4 will top out based on the demands we see for the various products of tankage that we have.